All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to show you a couple of cool things about inflation and a couple of cool things about Bitcoin. Then I'm going to breeze over a couple of charts and then say goodbye for the weekend. I'll come back tomorrow and do a weekend deep dive, TA as always. And the closes this week are going to be really, really important. The charts have got very mixed signals, so I'll just quickly show you that. But ultimately, it really, whatever happens today is important. How we close today and the week is very important. Everything between Monday and Friday is kind of irrelevant. So it's all on those closes, as I'll show you at the end. Every time we get a CPI print or I talk heavily about inflation, I pull this chart up here and I say, I wonder if we are going to get multiple spouts of inflation. The reason I have been expecting this is because the debt is out of control. Okay, the only way to service the debt, in my opinion, is to print it away. And of course, if they print more money, that debases the currency and should typically manifest as inflation like this. Of course, there are other factors at play, such as velocity, that are required. Of course, there's supply and demand factors that play into inflation as well. It's not as simple as print money, get inflation. But for the most part, print money, get debasement is certain. And it's because we have over 32 trillion, approaching $33 trillion of debt in the US. How on earth is this going to be serviced without debasement? It's also predicted that by 2033, 10 years from now, we will see this at 50 trillion of debt. But it doesn't get any better. It actually gets orders of magnitude worse. This is the US debt, which is funded. Okay, this is funded. This means this debt has been brought to market already. But scrolling down to the bottom right, look right here. Okay, US unfunded liabilities is north of $193 trillion. It is so over. It's so over. So within the next decade, we're going to be at 193 trillion plus the 50 trillion here. And this is undoubtedly going to continue to go up as well. How on earth do we service this? Keep in mind, US unfunded liabilities consist of things like Medicare, Medicaid, whatever you call it. This is pensions. In the UK, this is things like national insurance, the equivalents of that sort of thing. This is the stuff that the citizens are counting on. This is the stuff the citizens need. All of this unfunded debt hasn't even been brought to market yet. Hasn't even been brought to market yet. Do you have Bitcoin? Do you have gold, physical silver, cold stored Bitcoin? It's over, okay? And the reason I say it's over is because there is no way to service this debt without debasement. So going back to my original chart, as you can see, I think we're probably going to get multiple rounds of inflation, unless of course we have some kind of reset where they forgive all the debt and blah, blah, blah. You already know about the reset. If you don't, then there really is no hope for you at this point. Let's keep going. So working on this assumption, assuming this is true, and I'm going to play both sides of this argument, so stick around for that. Working on this assumption, if we really are going to see massive debasement in an attempt to service this debt, if we really are going to see multiple rounds of inflation like we saw in the 70s, then this should be the decade of commodities. We should see gold break out and do quite comfortably a 5x, somewhere in that neighborhood. We would think silver is probably going to do a 10x, slightly less than a 10x, I think, but 10x is probably on the cards depending on how severe this gets. We're going to see crude oil break out as well. Energy rises are coming if debasement is coming, of course, because it's not because these assets are going up, it's because the currency they're denominated in is going down. And the same is true of Bitcoin, the scarcest, hardest money on the planet. If we're going to see massive rounds of debasement, then number go up. Okay, as simple as that. That's the working hypothesis. But I saw this from Raoul Paul and it did make me wonder. It made me wonder if perhaps this is wrong. I had not considered this. So here is another look at that chart. The orange is the current CPI cycle. When you overlay them like that, it does indeed look like we could well be seeing the money printer go burr once more as early as Q1 of next year and another round of inflation. But as Raoul points out, this example is post-World War II. Okay, very, very different conditions to every other time that we saw an inflation cycle. So when we take the largest 5 inflation incidences post-World War II, this cycle was exactly in line with all the others. Note how, instead of getting a secondary spike, we get up, then down, and it stays down. So I wonder if this is what's coming instead of more debasement. The only way I could see this as a play is if we go into some sort of debt default, debt forgiveness program, or if they just decide to run these numbers up so high that by the time we get to the end of the century, these are being measured in quadrillions or pentillions. But it is certainly going to be interesting to keep an eye on whether or not we get more spikes in printing. This cycle from post-war is probably the most similar to today, and you will eventually get an echo boom in inflation due to mathematical effects, but it is likely to be much lower. The echo inflation of the 50s was 50% lower than the post-war reopening inflation. It's of note here that they dealt with this one via yield curve controls. They didn't want to destroy the economy with rate raises, financial repression, which we are seeing too today. It was a very good time for asset prices and eventually led to a big rise in productivity due to technology. And interestingly enough, the stock market is following that exact same pattern that we saw after those 5 major CPI rises and falls. So does this mean we're going up only for a long, long time? Maybe. Maybe instead of seeing this deflationary bust that I've been calling for, maybe this melt up chart is only going to be right for so long before we then, instead of see a rollover, maybe we just get a slight correction that then continues to move higher, as is in line with the 1950s cycle. I have at least been consistent in saying once we get up into this neighborhood, I won't just be jumping out of the market, I will be looking for technical reasons to leave the market, particularly if they're coupled with things like Congress banning themselves from owning stocks or emergency rate cuts as a result of something breaking. I do think the likelihood of a credit event being around the corner is increasing. I do think if interest rates stay this high, we are going to see more bank failures. I do think we're going to see issues pertaining to credit spreads. But as ever, the only thing we could do is take it one day at a time and see what the market will give. But given how much time I have spent speculating that we will see multiple rounds of inflation, I thought it was important, since I just saw this from Rao, I at least be objective enough and transparent enough with you to say, maybe we're just going to go up only. Now, as I'm saying that, I'm realizing there's probably people sat there rolling their eyes even harder, because most people are on the wrong side of this entire way up, right? Most people are on the wrong side. Most people didn't think this was possible. Most people thought 2008 was the only possible outcome from the lows. You know, I've done this multiple times. I've got this pen and said, everyone thought this was coming, then this, then Michael Burry says sell, bull trap, and now they're calling for this again. Maybe it's going to show up, right? Maybe we do get a credit event. Maybe we do get some kind of serious meltdown. But my point here is simple. Whilst this to me does make the most sense, it's important to remind ourselves to be open to all possible outcomes, including the ones that seem the least likely, like this, right? I do think it's worth pausing here to reiterate, look, 32 trillion, approaching 33 trillion. As I said, that will be 50 trillion within the next 10 years. And the unfunded liabilities yet to even be brought to market are north of 193 trillion. So I still think debasement is the only way. But of course, if I'm wrong here, it would not be the first time I've been wrong. Moving on. Have you got Bitcoin? Well, if you have, good news in the UK here, as Lolly point of sale terminals are now accepting Bitcoin Lightning payments here in the UK. So I was quite surprised to see this, to be completely honest with you. Most people in the UK have heard of Bitcoin, but whenever you speak to them, whenever people ask me about Bitcoin, they usually want one or two things, or one of three things. One, they want to know how much money I've made from Bitcoin. Two, they want to know if they can make some quick money from Bitcoin. And three, I noticed the biggest problem with Bitcoin is even the people that have known about it or have bought it at some point or are interested in buying it, they are not buying it because they want to exit the system. They are not buying it because they want to be self-sovereign and custody their own coins. Instead, they are fiat thinkers. They just think, can I take some of the fiat I've got, buy Bitcoin and use it to turn it into more fiat? Okay, so there's a big problem here in the UK. Is everyone wants a free handout. Everyone wants to know how much money the Bitcoin people have made. And like I said, everyone else is still stuck in a fiat mindset. Nobody wants to buy Bitcoin, at least that I often speak to. People ask me about Bitcoin all the time, but it's never, how can I exit the system? How can I circumnavigate or circumvent inflation and debasement? How can I be more self-sovereign and less reliant on the system? How can I protect in the event that we do get a credit event caused by massive amounts of debt that's not even been brought to market yet? Instead of asking the right questions, or even a more humble question, a more simple question, can you explain why Bitcoin? Can you tell me where to go and research it? No one wants to know that. They just want to know, how can I get more fiat? And that is completely pointless. So I was quite surprised to see the UK now accepts Bitcoin, but I'm of course happy to see it. And over time, I'm sure this is a trend that will continue. Something I was less surprised to see is over in Oman, they have launched a Bitcoin mining facility that is going to grow to 800 megawatts and use gas from oil fields that is usually flared off into the environment. The reason I'm saying I'm less surprised to see about this is because obviously if you have a bunch of oil and gas and a bunch of it is going to waste, then why wouldn't you flare it instead of into the environment and into the atmosphere? Why wouldn't you redirect it into Bitcoin mining? Of course you would. So I'm not as surprised to see this as I was to see this, but happy days. Either way, under the hood, Bitcoin continues to do Bitcoin things. Something is definitely going on, isn't it? This price action is clearly, there's something going on. I don't know exactly what. People are speculating it could be Binance. People are speculating that it was a leverage flush. Obviously, there's the 12K gang, which are out in full force again, saying, oh, we were right the whole time, even though we missed 100% move off of the lows. Either way, the facts are the facts. And whales and shark wallets, so that is 10 Bitcoin up to 10,000 Bitcoin, have purchased an aggregate of $308 million of Bitcoin in this local low window, as you can see here. So whilst people were panic selling, whilst leverage was getting flushed from the system, those coins were being handed over to the big boys. Are you surprised by that? Probably not. So moving into some charts, like I said, I don't want to spend too much time here. There are two ways to interpret this at the moment. The first way is, if we focus our eyes on this blue upward sloping support line, do we have breakdown, retest, looking for resumption lower? That would be the first interpretation. The secondary interpretation, if I zoom in a little bit so we can see what's going on, we may also have, if we focus our eyes on this first line of repair, this downward sloping resistance line, have we got breakout, retest, looking for that resumption higher? So the way we're going to know, of course, is if this indeed is breakdown, retest, resumption, then that will be confirmed by taking out that low right there, the local swing low that I have marked as the cycle low. And the way that we'll know if it's bullish is if we, of course, resume off of here and break out of this final line of repair, this one on the outside, the downward sloping red resistance line. It's a very mixed bag at the moment. It's difficult to say. The cycles tell us that we've probably got a few more days of upside at least before a rollover. But of course, like I say, if we break down and sweep that low, then it's a failed cycle and lower lows are likely coming. The exact same analysis and set of circumstances applies to the NASDAQ right here. Again, we could have breakdown, retest, resumption of the yellow line, or we could have breakout, retest, looking for resumption higher. Again, we won't know until we either clear the blue one or sweep the low. Either way, we're going to need to see some more price action. This is a very big candle, and the same is true of the S&P, of course. These are very big bearish engulfing candles right off of rejection at previous support, now turned resistance in both sets of circumstances. So is this a bad sign? Quite possibly, but would I be surprised to see this? No, not at all. So as ever, the only thing I know is that I don't know. All I can do is take it one day at a time and see what the market will give. There are some warning signs coming out of the Dow. So look at the Dow right here, okay? We had this big range for a long time. Now we're breaking down out of it. That is a bad sign. There's no other way to interpret that. Now, again, would I be surprised if this reverses and then breaks out next week? Absolutely not. That would be perfectly reasonable to expect to me. And all this would be, if we focus our eyes on this big blue box here, all this would be is a massive breakout of the bear market, followed by huge consolidation underneath this big technical level, followed by a type 3 breakout. Remember, type 1 breakouts, no retest. Type 2 breakouts, breakout or retest, resumption. Type 3 breakouts come in with a hard retest, meaning breakout, hard retest comes back below the original breakout level, only to sharply reverse and go higher. So is this a type 3 breakout? Possibly, or is this the start of more lows to come? That is, of course, to be determined. Again, I would love to be able to sit here and tell you I know what's going on. No one knows what's going on. There'll be a bunch of people online, on Twitter and on YouTube that can't wait to tell you what's going on. But remember, they don't know either, okay? Nobody knows what's going to happen. Objectively speaking, we need to see more price action. And the closes this week will be very important because a weekly close down below this neighborhood sets up lower lows. But if we close back up inside this box or somewhere in this neighborhood, anywhere in this neighborhood, then technically speaking, all we've got is breakout, type 3 retest, hard retest, followed by possible continuation into next week. So don't believe the hype. Don't believe anyone knows what they're talking about. Of course they don't. All we can do is take it one day at a time, see some more candles and see what the market will give. Nothing else has really changed. Yesterday I was talking about adding miners. You can see we haven't actually made any progress yet, so still no long from me there. The junior miner's working on a retest, so this could well end up being a resumption out of here. The long will look something like this, but as it stands, I have not yet taken this position. So we'll see what happens there. Bitcoin's still hanging around in no man's land. You know the deal, right? Above this, we're bullish and lose this local low, particularly this one down here at 24/7. And that opens up a much more bearish 60-day cycle to come. So that's it from me. I'm not going to spend any more time on the charts. Like I said, I'll do the weekend deep dive and I'll examine the closes because that's all that really matters. It could really go either way. So again, don't let anyone tell you they know what's going on. Nobody knows what's going on until we see in those weekly closes. And as ever, all we can do is proceed with caution, take things one day at a time and see what the market will give. So until then, enjoy your weekend. Take care from me. All the best. Cheers. Bye.